Good morning, everybody. Happy Monday. And what a Monday. What a start to the week. Welcome to the morning show. Spencer, JC, Steve. Good morning, chat. Man, what a morning. It's already been, I guess, the China and the US and the trade war and the tariffs, and I guess we're friends again. I don't know, but people are buying like there is no tomorrow this morning. So let's talk about that. Steve himself said he was maybe going to not do today's show, but how could he not do today's show in light of what has happened here in the last 12, 13, 14 hours? So let's talk about it. We got a lot of things going up. We'll bring JC on. We'll bring Steve on. We got Kenny Glick on today. We got two guests on the show today. We're going to bring one of them on at 9 and one of them on at 9:30. We'll have John Kosar from Asbury Research on at 9. And then at 9:30, I'll bring on Sean McLaughlin, and we'll talk to Brent Kochuba from SpotGamma about gamma trading and options. So that's the plan for today. A lot going on here. Drop me a like, and let go.
All right, we're back. We're back. How you doing, Mr. Strazza?
We're back.
You got your bull market glasses on?
Great morning. Great morning for the Bulls.
So Spencer was like, "Oh, all this stuff is happening. Can you explain to me what is happening and why I should give a damn?"
What is that Beatles song? Can we play it? The war is over.
Right? Something like that.
Something like that.
It's not actually over, but you would think it is, right?
Like seriously, like think about this. There are people out there who like this is what they look at, like governments and geopolitics. Imagine living life that way. I got a call last night, 10 o'clock at night. I got a phone call from a trader who we know very well. You know what he says? He doesn't even say, "Hi, JC, how you doing? How was the weekend?" None of that. You know what he says to me?
What?
Why are all these macro people always so bearish? I'm like, "Hi, good to hear from you too." You know?
Usually not the ones trading. You have to pay attention to this stuff. And it's part of the reason why we've been nailing them.
I don't have to do anything. I live in America. I can do whatever the fuck I want.
It's easier to make money when you're paying attention to stuff. Now,
it's a lot easier to ignore it altogether. To if my brokerage account has any say in the matter.
No, you got to know what's out there as a potential catalyst.
Like, I don't know.
It's so important. So like,
I don't know. I still don't know.
All right. So we've been picking specific time frames on our calls.
The U.S. and China, JC, to fill you in, since you actually don't know. I know you're not pretending. I know you really don't know. The U.S. and China agreed overnight, or I guess last night, our time, to suspend most of the tariffs, and then the tariffs that are not being suspended are still going to drop by like 80% or something, right?
So it goes from like something ridiculous like 90%, something like absolutely impossible, to 10 plus the fentanyl tax on top, so it ends up being 30.
Yeah, fentanyl tax.
Yeah, really? This is the kind of fun stuff that you miss, okay, when you're not reading these headlines. Yes.
Oh, it sounds so fun.
Steve, I was going to ask you, do you think the time of the week that a headline like this happens matters, like a Sunday night versus like a Wednesday night?
I feel like there has been an effort to put a lot of this stuff out on weekends over the course of the past few weeks. Have you noticed a lot of Friday afternoon stuff?
I feel like if I wanted the biggest move possible, I would announce something on like Friday night or on Sunday night. You know, it's just what I would do.
Maybe there's an element of that. I don't know. I don't think we're thinking that hard about it. Okay. I think that now things start to shift. Here, all right. Let's talk about what it means. This is what everybody was waiting for the most part. I don't think anybody expected some sort of big deal to come out this fast, but they needed to fix the untenable situation of the like retaliatory tariffs that they put on each other. Now that we're here, it's kind of like, okay, what's next? Like we could be out a ways from a actual like more comprehensive real deal. This is just like a pause for 90 days. Let's not kill each other in global trade wars while we try to figure this out. So now I think you have like this weird period where you're not going to get much bullish headlines in what's become a headline-driven, bull run here. So I'm kind of thinking, where do we go from here? And I'll be taking a lot of profits today for sure on this.
That strategy that we've been incorporating, every time they say the word tariffs, you buy more stocks, especially the Chinese ones. How's that working out so far? Pretty good?
And pay attention to how this works, everybody, right? The tariff stuff will still be talked about, and we probably won't even have like this deal in place by the time that this awesome rally is over. This rally is going to come and go before they even settle this situation, right? So think about that. The market's out here like every day rallying on tariffs. The rally will probably be over. It'll be time to get, buy some puts again by the time they actually come out with the final deal news.
I mean, a month ago, I remember being on vacation. Strazza's on the phone with me, be like, JC, you really should start tweeting again. People are getting worried that, you're leaving us. I'm like, dude, don't worry about what all these idiots on Twitter think. That's not your problem. Worry about yourself. Keep buying your stocks. I will do the same, and we'll be fine. And here we are a month from now. Strazza, remember I was in the hotel room in Fort Lauderdale. Strazza's like, man, you better start tweeting. People are what were you saying? People were subtweeting me. Subtweeting me.
You. Yeah. See?
Think about what a fucking loser you need to be and how horrible your life must be that you're spending your days trolling somebody on vacation as opposed to just buying stocks and worried about yourself. Imagine.
I'm just glad you started tweeting again.
And then what did I tell you when you called me and said, JC, you need to start tweeting? I said, worry about yourself. Don't worry about these losers. Right? Remember I said that? Sometimes I'm right? Sometimes, come on. The old man still got it sometimes.
He was drinking a pina colada on the beach. He said, I don't care about the bear market and Bitcoin.
I was drinking champagne. I don't drink pina coladas, but thank you. Yep.
It was in like a little tiki head carved out of a coconut.
No, none of that. It was just, I think it was a bottle of Vouv or one of those, or Perrier, one of those. Shall we do a little state of the markets? Because things are moving. I don't know if you saw. Things are moving.
That's what we're trying to tell you.
I see the futures. I just don't give a shit about your Chinese economy or whatever, your tariffs. Who gives a fuck?
Well,
all right.
All right, ladies and gentlemen, it was just hilarious that the president of the United States is telling people to buy stocks before he makes the announcement. Like, hate him or love him. That's actually pretty cool. We got the Dow futures this morning up over 1,000 points. Kind of a big deal. 2.6% to the upside. We got S&P 500 futures up 3%, 58.50, 250 points above that 5,600 level that we've been watching. That bull market is still intact. NASDAQ 100 futures pushing 21,000. Wow, up almost 4%. 780 points to the upside for the NASDAQ 100 futures. Wow, bonds getting the crap kicked out of them today. 113.5 for the 30-year futures. Crude oil up almost 4%. 63 1/3 there for crude oil futures. Copper down 0.5%, 462. Gold getting destroyed, down 3.3%, 32 1/4. You got silver down 1.4%, 32.5. With the VIX getting smoked back under 20. This sucker was at 60 a month ago. Now back under 20. And of course, over in funny money land, we were a nose hair away from a new all-time weekly closing high for Bitcoin. Didn't quite make it last night. I was watching. I was getting all excited. I'm tweeting. I'm like, hey, when does Bitcoin close? Because it never closes. The consensus was 0.0 UTC.
UTC. Yeah.
Which is 8 o'clock Eastern time. I had to look it up, but yes, that is the and I guess I agree with that, right? That makes sense to me. So didn't quite make it. I think if we would have made it midnight, I think it would have also not made it either. So I think no matter how you look at it, didn't quite close at the highest levels ever. It's all good. Bitcoin flat this morning, 104 even. Ethereum 2550 up 1.5%. Solana 176 up 1.5%. Total crypto market cap, Mr. Spencer Israel, 3.31 trillion.
Life comes at you fast.
How do we feel about this morning's futures?
I mean,
okay, Strazza, do you fade the open here? You and I have been balls deep long. I have been irresponsibly long in some cases because, go big or go home, right? Do we feed some ducks this morning?
I definitely. We've been feeding ducks
I
every
have
other
not.
day along the way.
I have not. I was on the phone with you guys last week when I was out of town. Popped into the morning show on Friday morning. I said I had not fed any ducks. Ducks are starving by me.
One way to do it.
Yeah, but I'm going to definitely, some of my more aggressive stuff. I had some short-term calls that expire next month. That I'm going to.
Trading the
You
calls?
get that decay, right? That theta decay, right?
Trading the calls? Look at you. All right. Hell yeah. Gotta do it.
I taught you how to trade calls, young lad. Come on.
Can't give you that one, sir. Sorry.
Come on. Yeah, I'm gonna feed some ducks. I'm gonna hop right at 9:30. I got some things to get out of my portfolio. CryptoPunks, new 52-week highs, by the way.
That's good. Yeah, dude, risk appetite. It's been fantastic.
Like, it's good for me, obviously, as somebody who bought the dip in the CryptoPunks. It's almost a double right now, by the way, for my second purchase. Averaging down on the CryptoPunks. Not something I normally do.
There you go.
What do they say? Only losers average down losers, to quote the great Paul Tudor Jones. But in funny money, it's okay. That's the exception, particularly when there are pictures on the internet.
It's almost like the cryptos were like front running this trade war news. Crypto's new.
I can't believe people actually worry about this trade war stuff. I really can't understand it. Can we get down to this? Throw up slide
JC,
2.
Wait.
We got to talk about
Well,
this.
by that logic, can you also say gold front ran it?
I don't think gold has much to do with it.
Slide 2, sir.
Yeah. So check out the euro today. You're getting that action, a lot of give back from these extended trends in forex land.
Yep.
Dollar's bouncing back here a little bit.
Dollars bouncing back with crude oil, gold giving that up, euro.
Yep. Energy looks great. Just put a bunch of love what's going on in energy right now. Commodities in general. But I'm surprised about the action in bonds today. I would have thought opposite direction, really, on this. So I don't know.
I don't know. Like, everything is now both hunky and dory. I think that means higher rates, no?
I guess so. Look, there's always like competing forces in the bond market, and you don't know which one's being weighed.
Dollars bouncing, and the world's not going to end. So that seems like bonds down.
Yeah, but another way to look at it was if they let this tariff thing go on much longer, then that's rising prices, higher prices, and then higher interest rates to combat runaway inflation. So
I think you're overthinking it. Remember how we always make fun of the macro clowns because they're always overthinking things? I think that's what you're doing here.
No.
I think energy up, dollar up, and the world's not coming to an end. Bonds fall. No?
No. The trade war means rising prices, means inflation, means raise rates. That's a logical sequence. No?
Okay, well that works with falling bonds also then.
My point is there's always these competing things with fixed income.
All right, so this isn't the first time. This isn't the first time that we've seen this. I really, really love how angry people get at who the president is and his behavior. And of course, the weakest minded. I mean, just the really criminally insane humans that just have a hard time overcoming their political beliefs and allow what they think about politics to influence their decision making in the market. I mean, you got to be some kind of asshole to let politics get in the way of your decision making. And unfortunately for us, that happens quite often. And these schmucks have been shorting the crap out of this market because they don't like the orange man. And man, we saw this in 17. It was fantastic. And I said it before, this time they're even more angry. Somehow they're even more depressed this go around with 2.0 than they were on the last one. So common sense, at least for me, was then the squeeze is going to be that much better, right? If they're angrier this time. So I think we've already been seeing it. I think we're continuing to see that today. Obviously, I think it's got legs. The guy that called me last night, who didn't even bother to say hello, how you doing, just ragging on the macro bears. He tells me, dude, market's going to go up the rest of the year. This is it. It's never going to look back. That's what he told me last night. 10 o'clock at night, I'm getting phone calls.
I can appreciate that person who calls you. I don't know who you're talking about, but I'm just assuming they're from New York or New Jersey or Connecticut because
0 for 3. Nope, none of those three.
Well, they're from the East Coast.
Yes,
because we don't have time on the East Coast for pleasantries. We don't have time. We have things to do.
You're not wrong, Spencer.
We don't have time to say hello. We have to get down to business right now.
It's true. Yep.
This is my wife complains I don't say hi or bye. I got it. I'm busy.
Yeah.
You know?
You don't need those words.
No.
Yeah.
So you think that I'm just making this up, Strazza, or you think there's something to it?
I mean, Trump's on fire right now, man.
And you think these libs are happy about that or not so much?
Some of them have really come around. I mean, if you want to be honest about it, holy shit, have you guys been watching Bill Maher?
What?
I don't know.
Bill
He's
Maher's
got
a
new
Republican
fans.
now?
He's got new fans over there on the West Coast this time around. A lot of new fans. You notice this? Well, I don't know.
Man, the sentiment was on another level, bro. I mean, this is on another level. So I'm really curious to see how some of the data coming in over the next couple of weeks, see how much these guys are blowing up. I mean, these shorts are getting destroyed, man.
Can't be
It's a
short.
beautiful thing.
What were they thinking? How could you be short in a situation like this?
How can you be short when so many people are so short? I just don't understand. Like when these shorts are so crowded, you're going to pile in, you morons? Like, what are you doing?
Two largest economies in the world are going to wage 100% tariffs on each other. They're critically dependent on one another, right, for the flow of global trade. They're going to put 100% tariffs on each other, and we're not going to get good news in the future that wasn't going to last. We were always set up to go higher.
To me, it's less about the shorts and more about the people that went to cash, because now they're like, oh shoot, right? What do I do? Do I trust it? Do I give it? And that right there is the ultimate conundrum. When it's easy to sell, it's really hard to get back in. So,
big question for me going forward, JC, I would love to know what you think, is what are the areas? How do we want to play this? I think going to large cap growth, keeping it simple, right? The relative strength leaders, the Palantirs, the Netflixes. That was the easy way to do this off the low.
Can we give Strazza his flowers? Let's give Strazza his flowers.
To expect some
pounding the table on rotation back into big American growth, pounding the table, not just big American growth, the speculative growth too. You nailed it, Strazza. You absolutely nailed it.
It's so hard to bet against those stocks for too long. I think they were low-hanging fruit to catch some flows back. We had that dollar flight story. Now, though, JC, the question is, did that trend have legs? Are we going to see that kind of persist where we're going to look back a quarter or two from now and say, it's still world over U.S., right? And it's still lower dollars. And it's still U.S. growth stocks, maybe not showing that leadership that we're used to.
Show the tampon guy. No. Show the tampon slide 3 there.
Because you're still set up. Like you're talking about something like Tesla. There's a long runway to get back to cycle highs, like a lot of other stocks and stocks around the world particularly are now. So
Strazza,
that's a great trade.
Strazza.
Back to highs.
So I got my Dunkin' Donuts. You know, wifey brings it to me when she swings by after dropping Alexander at school. And literally she's handing me the coffee as I'm asking Spencer to put up the tampon guy. And she just, the look I just got, like, what is happening?
She knows our job isn't real.
What are you talking about? Why are you talking about tampons on the morning show? I'm like, if you only knew, sweetheart, if you only knew that these tampons are making us so much goddamn money, man. So this guy, let's just remind everybody, like, please, can somebody put the link in the chat to this guy, because this is like, you know, and it's not like a victory lap. It's a lesson. It's a case study. This is a case study.
You see, he was bragging about not owning stocks.
Dude, this guy's always telling everybody how broke he is and how he doesn't own any stocks. Dude, somebody put the link. You guys have to see this because people think I'm like making this up.
Wait a minute. What about the other side of this? So when did Doge
shambles?
When did the whole Doge thing start? Like last fall, right? Like after the election, obviously, right? So if you're going to talk about, you know, someone at the bottom, talk about someone at the top too. I mean, Doge was the catalyst, or maybe not the catalyst. This is not the wrong word. Regardless, there's an inverse correlation between Doge going up and Tesla going down, right? So it kind of works in both directions, doesn't it?
No.
Yes.
So we were looking for oversold conditions. We were looking for extremes in bearish sentiment. We were already getting into Tesla. Like the setup was already there. And then the tampon guy, he's on stage giggling. This is a vice presidential candidate, literally.
Well, former
this guy running for vice president of the United States of America. and he's giggling and like talking about how he gets his rocks off during the day and it helps him get through his difficult day, seeing the price of a stock falling. This is a company that employs 125,000 Americans.
I can't believe that you're still bringing this up, man. This is just, he's one guy. He's one guy.
He's not just one guy. This is a vice presidential candidate. And this is not about libs and Republicans. It's not about that. The guy could be communist. Has nothing to do with your political affiliation. This is a case study. When you see this kind of behavior, you shut the fuck up and you buy the stock as much as possible. We said it in real time. We did it in real time. I was irresponsibly long, and here we are.
I would not have guessed that a month out we would still be talking about tampon Tim.
Can't believe you're talking about this still,
dude. Let's just give a big shout out to the tampon guy. If it wasn't for this schmuck, we wouldn't be so rich, right? Is that Charlie Munger? If people weren't wrong so often, we wouldn't be so rich, right? Dude, so good.
Bill makes a great point. Dude, some people don't own stocks. Totally, Bill. That's not why it's funny.
Whose problem
this is a congressman. This is a congressman. This is a political representative of our country. And he doesn't own stocks? I think that's crazy.
No, he does own stocks. Of course he owns stocks.
You should be allowed to be a congressman if you don't own stocks, if you don't believe in your country. You don't want to invest in your country. So I think it's more about that. Some people don't own stocks. But also maybe like
he's just super broke, so maybe he just doesn't have any money. There's that.
No, he does. Obviously,
to own some stocks.
He owns stocks. It's ridiculous. He was pandering. He was pandering.
It was so
he was pandering.
When I saw that, I was already long a little bit. And when I saw the tampon guy giggling on stage, I was like, oh, this is too good. And then the same week, I'm on the phone with normies. Remember? Check the tape. I was on the phone with normies, and the normies are telling me that they're going to get off Twitter because they don't like the Elon. Remember? And I'm like, really?
He's a governor.
It's so good. So these things are squeezing. Who's
our guest today?
400, and then we'll see. It's messy up there, right, Strazza?
All right. Can I tell you the headline that stands out most to me today? It's got nothing to do with trade wars. I think yes. I think you got to own Tesla, Mag 7s. There's still a catch-up trade playing out there, I think. So I like it, JC. I'm on board.
Can we throw up the Bitcoin, please? The fact that it's now 8:55. I know we got Kenny coming in. Throw it up, and then we'll bring in Kenny. But the fact that it's 8:55, we haven't mentioned Bitcoin once.
I want to talk about shit that people are thinking about this morning because it's in the news.
What's that?
Last chart, and then we'll bring
the drug price stuff.
Oh,
Bitcoin.
Yeah.
Look at the other ones. How about the altcoins? It's going to be a Solana summer.
Oh man, this thing looks like it wants to break out so bad. This thing's got 155 written all over it.
It's a great chart.
And we'll get back to the biotechs because speaking of, the owning of the libs, the price of the drugs falling, isn't that something liberals like?
So you think 100 gets you 150 here, pretty much, right? This little
I think sticking the landing above 102 gets you 155. Yeah. All right, bring them out.
No, wait. Eli Lilly is down like 5% pre-market. They're finally coming after these guys. So the weight loss drugs are going to be the focus of new drug price actions. White House official is saying that guy Robert F. Kennedy is an absolute crazy person. So if anybody can do this and pull this off, he doesn't give a shit about the drug companies one bit. I think you got to be careful. And there's a perfect top. Do we have the chart? I know Alfonso's traveling today. Did you know that?
I've been waiting for this for a while, but it still has
right now. I'm supposed to be on a plane in an hour, but I can't. God forbid. The one day I got to get on a plane is a tropical storm here. So
hold on. Are we shorting? Not to be insensitive about your tropical storm, but this is the breakdown I've been waiting for pretty much all year.
700 in Eli Lilly, right? Clean. See ya. I'll chase that today because it's just such a clean top.
And then, so what are we gonna do? Just short the crap out of it, or
maybe do it through
some put spreads? Maybe some put spreads?
Yeah, it would have to be spreads. I'll have to talk to Sean.
All right. I already pinged Sean about something else. We're keeping Sean real busy.
Sean's coming. Sean will be here in like a half hour.
Beautiful, fantastic. But in half an hour, I got some ducks to feed in half an hour. So let's get him here a little sooner. Let's get Kenny, please. I want to know what he's doing. He's fading something.
Kenny, where you at?
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up.
Mr. Kenny Glick, how are you, sir?
All right. What's up? How was your Mother's Day?
Happy Mother's Day to all you mothers out there.
Happy birthday to all your mothers out there. How you doing? Who's a
Oh,
drunk guy?
markets are ripping. What do we fade? The way I learned it, Kenny, was that if you ain't fading, you ain't trading. Is that right?
Well, I like the second part of that statement today because I might not be trading today. So I mean, UVXY is the only thing I was actually. I'm not actually.
You're not looking for a fade today? That's surprising.
Yeah, no, I'm probably just gonna sit and wait. I'm just waiting to see what the Qs do here. Considering everybody's on the wrong side of this market, yet you might not get the fade you're expecting. But yeah, I mean, it's inevitable. You'll get some profit taking, especially if you guys just bought the Qs on Thursday or Friday. I mean, I was trying to tell people, talking about that stuff on Thursday and Friday. With boring is bullish. If there's air, if the sun came out, it's bullish. But really, dull markets, there's a saying, what's it called? Never short a dull market. Boring is bullish. Typical bull markets, we sit around a lot, and Thursdays and Fridays were kind of boring, but there was no sellers. So it was just basically waiting for the Monday gap. So, again, if you did come in today and you just bought, you're probably going to want to take some quick profits. That's what the fade's all about. But, there's so many people that still want into the market, and the shorts who are, once again, lazy, complacent, and wrong, again, as they always are. They're going to be licking their wounds. So they're going to still have to cover here. So we're going to get some chop, and I'm just going to wait for it to just dissipate a little bit. But I just want to give it up to myself, right? So this is why I don't own stocks. And again, other than the QQQ and, Palantir, fantastic, great. SRAD, right? So here I go. I bought more on Thursday, bought more on Friday, and they reported their earnings this morning. We're having one of the biggest gapped up tech days in the history of the market, and my stock is down 57 cents. Thank you. I'll be here all week. That's right. So my track record holding stocks into earnings reports now is 0.000875%, as I've done some back testing. So it's amazing how I just have the worst luck in the world. Somebody kill me.
Kenny, we got the NASDAQ up 4% today. Granted, we don't have any kind of faux show bro yet. But is that something you'd be looking for?
Well, you know what? It's the opposite of the faux show, bro. So if there's going to be some fading, you want to see a blow off top. So basically, it's the opposite. You want to see a new high, break, and then roll, and then break prior low candles, and then maybe we have something. And that we're flirting with that moment right here with the QQQ. But like I said, this is a nice day to just observe and report. It's, again, when we're traders and we're doing this for a living, any day where you don't find you have an advantage, why not just don't trade? It really is that simple. And, a lot of mistakes, most traders know exactly, I trade too much. I overtrade this. I chase this. Everybody knows what they're doing wrong. I tend to overtrade. And on days like today, I'm bent on shorting something, and I come in and I'm going to short something. But also, you got to remember the environment. The faders have not been getting paid either. You're getting such bullish. It's such a bullish environment that the fades are so short-lived that you just might as well wait it out, and let's see if the selling does come along, and then you'll get some faux show bros. But again, it's just one day. And it's a big day. The headlines are going to be all bullish this, bullish that. For us, it's just another day. I'll wait to see what happens and play it accordingly. But
there's some big movers obviously because the indexes are having some outlier days. But what stands out in terms of the movements? We talked about Eli Lilly. That's getting the crap kicked out of it with the market ripping. So that stands out to me for sure. What else? Yeah,
you know what? Oh, well, I'm going to keep an eye on the stock that I own here with this SRAD reporting kind of in line. But you know what? It's I'm going to look at some of these ones that just like a Tesla, right? I think the gap is going to hold and you're going to go. The gap and go, it's kind of an elusive trade.
So gap and go in the Tesla. Spencer, you want to throw that one up? We were just looking at it, slide 3 there.
And also this whole market is called it's a power gap now. So a lot of stocks that were
hold on. Yeah. I don't know I haven't heard that phrase before. Power gap. I like it.
Power gap. Yeah.
Tell me more. Tell me more.
Power gap is when you're consolidating and you're waiting for the breakout, but then you gap above the break. And now you've trapped even more shorts, and the longs don't want to get in right away, but they feel compelled that they have to. So you never actually close that gap, and it just leaves everybody wanting. So the power gap, that's what a lot of stocks have done today, where, again, I was looking forward to buying some of these stocks like a Tesla, but now you've power gapped. And when you power gap, that usually the fader, you're going to get killed because the gap tends to just go. So it's a very tough situation right now. Like I said, a lot of stocks have power gapped above consolidation and breakouts, where you would normally think, all right, we're gonna have some selling to come into that gap. Not in this type of move, and not in this move. So again, as a shorter, I'm scared right now. Again, I'm not coming in short, obviously, but when you power gap like this, you generally consolidate at higher levels and go higher, which is crazy, considering the depths of where we just came from. So that's where I'm at.
Give me one more name on the move.
Oh, you know what? I hate to say it, but I'm looking at the Chinese stocks. My favorite, I like Tiger Woods, TIGR, ripping right now. The stock, when it gets into the double digits, it tends to even, again, rip some more. I'm looking at this stock because now that it's back into the 10s, the last time it ran to 15, keep an eye on Tiger, because this stock tends to get squeezed quite often. And, couple more points on this thing. You're talking, was it 2-year highs, 3-year highs, TIGR. And I hate Chinese stocks, but this one's fun to trade quite often. All right, be careful out there. That's my theme today. Be careful.
Responsibly.
Yeah. Trade responsibly, and remember, just let the consolidation happen. We're in a perpetual bull market and it never ends. Cheers, my friends.
Love it. Kenny Glick, ladies and gentlemen.
That was great. Kenny's buying Chinese stocks. Didn't see that one coming today.
Say he doesn't buy Chinese stocks.
Yeah, they might be in his personal vendetta list, but
yeah, I thought so too.
Yeah, I don't know. Hey, we got John Kosar hanging out backstage, Asbury Research. John, you here? Yeah, he's here. All right, let's bring him out. He sent over a few charts. They're in the deck. Let's talk to John. See what's going on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, John, how are you?
Hey, good. How you guys doing? Good morning.
No complaints. Bull market, shorts getting squeezed. Not a bad little Monday.
Yeah, I picked a good day to come on.
Listen, having you here every day is a good day. Every day is a good day around here, John. We're not cherry picking around here. It's just another day. Turn the page.
Yeah.
We've learned that over the years the hard way. You see, when we overthink a particular day, that's where the problem starts. So it's just another day in the market.
That being said, John, when you come in, you sit down on a day like today and you see things up the way they are up, what's your first reaction?
Where's the next resistance level?
Nice.
Really?
That's what I like to hear.
The market gave us a gift. How far could we go from here? I mean, I'm just looking at the cues here pre-opening, and we've broken a pretty good resistance level. We've broken a good resistance level in SPY. So these are I call them breakaway gaps. Breakaway gaps typically are not filled, which means that we should be able to get a move out of this thing. I mean, it shouldn't be a one-trick pony. It should have some longevity. I'm not saying till Christmas, but this is a meaningful gap if the gap holds today.
Well, you think there's a chance that we give it all back?
There's a chance for anything. You know that, right? There's a chance.
Spoken like a true veteran.
I mean, how many times have we gotten, my son works with me. He's my partner. And we'll sit down in the morning and we'll look up at the screen and we'll see, the market's up 80 or 90. And, before we get too happy, it's like, let's see what happens after lunch. We might be down 40. And on some of these days lately, we are. So, you got to take it. You're a baseball player. My son is an ex-college baseball player. Pitch by pitch, You can't get too far ahead of yourself. It's real easy for your emotions. You guys know this. Really easy to walk in on a day like this when maybe you started to buy some stocks last week, and then you're puffing yourself up and strutting around. That's when you get run over. So, keep it humble and pitch by pitch. I think that's how you do this.
I think that's a great point. Act like you've been there, right? There's no reason for end zone dances. There's no reason to, this is just another day. What I do like to point out in these scenarios is really, some of the signs, some of the things that have been happening more as like a case study than a victory lap. Like there are certain things that we've been pointing to that you can see that we're alluding to certain market behavior. Like that's really, whether you win or lose, whether you score a touchdown or you fumble the ball, like there's always a lesson, right? And even in trades, like when you make money on a trade, you still screwed up because you could have made more money, right? You could have picked a more aggressive strike. You could have owned more. You had more position sizing. So even when you nail it, there's still lessons to learn. There's still ways that you could have improved on that, right?
I think so. You said you got to be humble, and the markets are like fire, right? They could either cook your food or they could burn your house down. And you have to kind of have respect for them in that way. I'm from the trading floor, and I saw too many guys get escorted off the floor in the middle of the day with the rest of the 3,000 watching because, they blew up. They made a bad trade. They tried to trade out of it. There's a million stories down there, but that really gave me a healthy respect for this, like fire. So I've always been, people think when you come from the trading floor, you're like this, riverboat gambler guy. And I guess some guys might be like that. It really affected me the opposite way. I am much more, we all know the market goes up. I came from the commodity space where the markets generally go sideways over time.
Right.
It looks good. And then I got here, and the market has an inherent upward bias. It has for 100 years. So you don't need to be, you don't need to take exorbitant chances because that inherent bias is always got a little wind at your back here. So, I tend to be more defensive.
So talk to me about what are you thinking now on a situation like this where, we have a 23%, what it was, a 24% return for S&Ps in 23. You had a 23% return for S&Ps last year. Global markets absolutely ripping all year, US underperforming, and now you're getting that snapback, US playing catch up across the board, epic squeeze, ripper across the board. Like now you take a deep breath and it's like, okay, so now what, right? Like how do you think through this process moving forward?
Honestly, it's kind of two different things. So over the weekend, I'm watching Fareed Zakaria, and I'm watching guys that know about global conditions, trying to get a sense of, Wall Street Week. Larry Summers is on. I watch him every week just to I want to know what the big picture is. Not that I'm going to use that to trade.
Wall Street Week, like the old show?
Yeah. That's Bloomberg has a version now.
Stop it.
And it's
really
good. It's really good. Bloomberg
with Rukeyser? He's not alive anymore, is he?
No. This is another guy. I think Lewis is gone. But it's they have Larry Summers on there every week. They'll have they had Ken Rogoff. You remember Ken Rogoff? He was the head of the International Monetary Fund years back. He still might be. But they have all these smart guys on there talking about what the landscape is, right? Is it a muddy field? It's kind of a 32,000 feet for me. Okay, so what do these guys think is going to happen? And then pitch by pitch, right? I'm just kind of watching the market every day, watching things turn, watching technology started outperforming a couple of weeks ago. That was a really good indication that the market was getting better. I saw asset flows expanding in the right places. Some of our short-term indicators, one of them I brought in the report, it's the Asbury 6. That turned on April the 23rd. So I saw all these little pieces, right, starting to turn over, which And prior to that, and you guys saw this, there was enormous support levels that were tested on April 7th.
Yep.
There was one in the S&P, there was one in the comp, and there was one in the Dow 30.
Yep.
So it's kind of like one step. Is this going to hold? It held. And then you start getting like this metric just shows the internal strength of the market 6 different ways. We back tested this to find 6 indicators that are tactical in nature and tell me what the condition of the market is every day. Because when I look up at the screen and it's up 50 now and it's down 50 in a half hour, it doesn't tell me anything. So I need to kind of focus on what the gyrations of these indicators aren't going to be affected by that up 50, down 100 stuff. This kind of keeps me from getting knocked off. How many times have you gotten knocked off of a great idea because of the intraday volatility, right? You buy the market and then all of a sudden it punches you in the forehead and you're down 100.
Yeah.
And then the next day, you're thinking, well, that was just one day. And then the next day it's down 50 pre-opening and you're thinking, what did I miss? This helps to keep me focused on the stuff that can't be manipulated by these day-to-day noise. I mean, like, to me, this is the signal, and that, the crazy town on your screen, a lot of that's often the noise. Even though that's how we get paid, a lot of that is noise.
I love your rules. You brought a chart of the S&P here with a few moving averages. You got some lines. Looks like price is above all of those lines. What does that mean to you?
Once a week, sometimes twice a week, we put a simple chart out to our subscribers. I call it the game board, right? So, where's support and where's resistance? If you're long, you want to be knowing what's up above your head. So this 57.48 to 57.73, this was written on Sunday morning, on yesterday morning, letting people know that we're right up against major resistance level. So what are we going to do there? Kind of know where that is. So we bought the Asbury 6 flipped to positive, to green on April the 23rd. You see April 21st there. So a couple days after that, it flipped back to long. So if you're long from there, you want to know if you can't get through the resistance and the Asbury 6 starts to turn red, those individual indicators start to weaken. That tells you that you may want to take that trade off up here until the market decides kind of where it's going next. So this just tells our subscribers where the support is, where the resistance is. So we're going to gap through here this morning at 57.73. We're going to be up in this neighborhood. I don't know, 5,900. I don't know exactly where. I'm looking at SPY. I'm looking at Qs right now. SPY gapped up through that same level, which on SPY is 575.35.
Yeah.
So, the next level, what do we got here? Looking at the chart, you might have a little resistance around 6,000, but it's kind of blue sky up here. As long as if that gap gets filled in 3 days and we roll over, you got to reassess. But right now it looks, at 8:17 in the morning, Chicago time, and the market hasn't opened yet. It looks like a breakaway gap to me.
Man, you talk about a breakaway gap. You had Kenny talking about a power gap. I love that just philosophy, the power gap, which I think, as you yourself, a formerly trained chartered market technician, myself as well, we call them breakaway gaps. Kenny Glick, self-taught, school of the hard knocks, he calls it a power gap. I think we're talking about the same thing here, right?
Well, yeah, when there's so much demand that the market has to go higher up the deck, right? Like if you're in the pit and you've got a deck of orders and so much buying comes in that you can't, it actually forces you to reach higher up into your deck to find sellers. That's what this is. I mean, it's a burst of demand. We all know why it happened, but generally speaking, it's a flush of greed is really what it is, right? You could have a flush of fear on the downside. You could have a flush of greed on the upside. I think that's really what that represents. And I've moved away from some of the, the RSIs and the MACDs and stuff, and we build our own indicators here. But gaps are meaningful because that's a place where price doesn't trade, right? That's a little kind of hole in your chart. And usually what causes that is a burst of fear or greed. And as long as that gap isn't filled over the next, if that gap, the gap could be filled at 10:30 this morning, right? I mean, we know that.
We've seen it before.
Right. But if there's a gap here and it sticks, we could take a run at 6,000 again. Do I think it makes sense to me? It doesn't have to make sense, to trade.
That's right.
It really doesn't. And as soon as you start overanalyzing and trying to make what's happening in the world and what's going on in your chart, as soon as you start to make them have to reconcile each other, you're in big trouble because oftentimes they don't.
That was a big lesson to learn. It doesn't have to make sense to you.
Yeah, throw up the cues, please. I like what he's doing here. So now you're looking at cues on an absolute basis up on top, flirting with that 200-day coming into last week. And now you got cues relative to SPY. So the chart below is going to give you, almost twice the exposure to technology. So, kind of a lot more technology on the numerator versus the denominator, and a lot less of the other stuff, right? And the cues, as a reminder for the folks who might not be aware, the NASDAQ 100 has no financials, no real estate, no materials, no energy, practically no industrials, right? You got a lot of tech. And then, right? So talk to me about that ratio and the relative strength improvement.
Sure. My thought was over the weekend, because we're bumping up against these resistance levels that we just looked at. So you're looking for something to give you a lead off. I use all these baseball terms because I had 2 kids in travel ball and played college ball. And I know you used to play too. So you're looking. So when you're up against these major resistance levels, the next question is, where's it going next, right? What chart can I use to give me a lead off, to tell me maybe the market is leaning one way or the other? And this was important for me this weekend because it's telling me the market is leaning upward. Did I know that it was going to open 175 higher? Nobody did. Well, we hope nobody did. But what that told me was that according to this chart, there's a lot of typically technology leads up and down. When the market's feeling strong, people want to be on those fast horses, right? So they're going to be in the, they're going to be in the NASDAQs. Sometimes they're going to be in semis. When the market's feeling defensive, they're going to get off these fast horses and they're going to get on the burros like the Dow 30 or the NYSE comp, something of that nature. So this told me as of April 25th now, which is almost 3 weeks, that the market's leaning upward because Qs, big cap tech, all those big names in the Mag 7, they are outperforming the vanilla market, the broad market, which is the S&P 500. So this was one of a couple of 2-3 different relationships that I looked at over the weekend that suggested to me that the market was generally, it still hadn't made a huge commitment yet. But if you kind of look under the hood, you can see stuff like this that shows you the market is leaning towards aggression. It's leaning towards risk on. And that turned out to be right this morning.
John, I appreciate you coming in. This is great stuff. Chicago guy like yourself, does it make you feel like proud that the Pope is a Chicago guy, or do you not care at all?
I don't really care.
You don't care at all. See, I don't know how it would feel like if the Pope was from Miami. Like maybe that's just funnier if the Pope was from Miami than a Pope from Chicago. Like I feel like a Pope from Chicago makes sense. A Pope from Miami, that just adds a whole nother layer of hilariousness. So
the only thing that it made it a happy day for me is he's a White Sox fan.
I saw he's a White Sox fan.
He's a White Sox fan. So, he's going like this and I'm going like this, right?
Yeah.
He's a White Sox fan. If he would have been a Cubs fan, I would have been very disappointed. But
He's the White Sox. They showed like footage of him like at the World Series years ago, right?
It made me think, maybe I should start going back to church. The guy's a White Sox fan.
That was hilarious, dude. That was good. Good for him. Dude, Pope's a baseball fan. How sick is that, dude? Right?
He went to Villanova.
Yeah.
Oh, he went to Villanova? I didn't realize that.
That's right.
Oh, wow.
And my son went to school on the South Side, Illinois Technology. So we have some South Side roots. So that was cool to see.
That is pretty cool. All right. Shout out Chicago. I freaking love Chicago. Dude, we got to get back there. We got to hang out for sure.
Yeah. We missed you last time. We'll try to get you. We'll try to get you next time.
We'll be back. I love that town. Are you kidding me? We went to a Cubs game. Weather was great. Good eats. Oh man, dude, I had so many brats. I wasn't even hungry. I just kept eating them and eating them. I felt so disgusted with myself. I went on a crazy diet afterwards.
Yeah. Awesome. Gotta let your hair down sometimes, and the ballpark's a good place for it. Right?
It was unnecessary. It was really disgusting. I was really disgusted with myself, but they were so good. Just extra onions. Just keep it coming.
And it always tastes better when you're at the park. I don't care what you eat. Whatever you're eating, if you're outside, you're at the ballpark, it tastes better.
It's true.
We were in the right field in the houses out in right field. It was sick, man.
How was the view out there? I've never sat out there.
It's great.
Was it good?
Yeah, it was wonderful.
I took some pictures. I sent it to my wife, and she's like, "Oh, I thought you weren't going to the game. That you were going to go across the street from the game." I was like, "I am across the street from the game. I'm not at the game." She's like, "It looks like you're at the game." I'm like, "Yeah, it feels like you're at the game too."
And I guess because it's such a little ballpark, it doesn't feel like you're that far away, even though you're
awesome.
outside.
I heard they're going to knock them down, so you better get there while you can.
Yeah.
Well worth it. Well worth it. Get like a group together and go do it. Got to do it. So good.
I've probably been at that park a dozen times in my life. When we were kids, they used to take us there for a field trip.
Oh,
the Cubs games. I mean, I'm an older guy, but I think it was like 50 cents or something back then to sit in the bleachers.
What a great field trip.
So they'd take 50, 70, 80 kids, from wherever, put them on a bus, and you'd spend the day at the ballpark. It was awesome.
They don't do that anymore, huh?
I don't think so.
That's a bummer. But that was back in the day. It was only day games back in the day, right?
That's right.
Yeah, what was that? 90s, maybe mid 90s that they put the lights up.
Yeah.
You're aging yourself there with that 50 cents a ticket there, John. I got to tell you.
Well, yeah, it happens. When
keep
you
that
tell
to yourself
the truth,
in the future, all right? Keep that to yourself.
Yeah. Well, you know what? In this experience, it's good. I mean, look at Ralph Acampora. What is he? 80 years old?
Dude, still going.
He's still sharp as a knife. I just saw him not too long ago. He's I want to be Ralph when I'm 80.
Listen, I'll tell you what, Ralph, what did he always say? JC, don't fight Papa Dow. Don't fight Papa Dow. God damn it. Thank God I listened.
Yeah. He's
Ralph Acampora, he was in the seminary to be a priest. He could have been the Pope. Instead, he was a
he's the Pope of CMTs. It's close enough.
Tell you what,
Pope of CMTs. I like
it's close enough.
If I'm still around and we have a Pope that's a CMT, I will start going back to church.
Yeah, I'll take the under. I'll take that. Yeah.
Thanks a lot, John.
Good to see you.
See ya.
Oh,
Dude,
man.
Pope that the CMT? How epic would that be? That's never happening.
Forget about it.
If you're a CMT, like, you don't have time to be the Pope. Like, you got to, there's plenty of money to be making. You can't be poping around,
Right. Hey, you asked for Sean. I summoned Sean. Sean is here.
Here's Strazza. Speaking of someone who's never going to be the Pope.
Shout out Chinese tech stocks.
CQQQ?
Sure. Yeah. Oh, yeah.
I'm in the Baidu.
Yeah. 4%. Cool 4%. This month, they're all 4, 5, 6, 7% out here. The Chinese mega tech.
They're not up more because you guys are making such a to-do about this China thing. You'd think they'd be up double digits.
It's a huge move.
They aren't
across the board. I haven't seen this kind of pre-market action all year.
You're not
all right.
Big debt. All right, bring in Sean. We got
I'm bringing Sean, and then Sean is going to talk to. Okay, whatever.
Hey, Sean.
Johnny, baby.
Hey, did I miss something this weekend? What's going on?
China,
Johnny, baby.
What's up,
So
boys?
we're going to New Orleans, huh?
Good day to go to New Orleans. I'm leaving today.
You're leaving today. I'll be there tomorrow. I want to go straight to Acme Oyster Bar, and I want the grilled oysters.
What time?
Strazza's never been to New Orleans, right?
No, what time you want to go?
I think I get in like 11:30. So let's just go. I'll throw my bags in and we'll go straight.
No, wait for us, like 3 o'clock.
Strazza, did your flight get canceled today?
My flight got canceled. I woke up to a canceled flight this morning. Yeah. I'll be in late tonight. I won't see anybody tonight. So
our dinner plans are off tonight. Oh,
dinner's canceled. Yeah, I'll just let everybody know.
You guys can still have dinner. You don't need Strazza at dinner.
Yeah, you guys should hang out without me. I'll be very bummed and have FOMO.
I'll take the boys out. I know some places. I'll take them out.
Yeah, do it.
Sean, so we got a couple things going on here. This Uber pushing up against these highs. Started little starter position last week for me on the Uber. Front running a breakout a little bit, Strazza style. But like if we get this breakout, like I want real positions on. I want that kicker, little 25 delta. How you doing? You know what I'm saying?
Yeah. Am I seeing this right? Is it not gapping up at the moment, or is my data bad?
It's not gapping up as much as you'd think.
It's not moving
flat.
Yeah.
That's surprising given what we're seeing.
Well, it's up 1.7%. There's still that resistance. So
it's been going up though. It's been so good.
Oh no, it is gapping up.
The relative strength has been off the charts. There isn't a single tranny that looks like that. Ryder looks pretty good, but Uber's the tranny, like the lead.
It's up tranny. $2 from Friday's close, so I take it
best
back.
Looking tranny in town. Best
looking tranny. Speaking of trannies, be careful in New Orleans. I gotcha.
You know what? We survived Bangkok. We'll be fine in New Orleans.
Oh, this is true. And Strazza's from Key West, so
I practice all the time. Yeah.
Just look for the Adam's apple.
Hey, is Brent here? We got to get him on, man. We got important stuff to talk about.
Brent is here, actually. Brent Kochuba from SpotGamma. So I know it's the open. Oh my God. Programming note while the guys are all still here. So we're still going to do a morning show tomorrow. Myself and Jason Perez, and then that might be our last show of the week. But we're here now. We got Sean. Sean, we missed you last week. You were traveling, and now you're going to travel again. So
that's been a busy travel couple of weeks here.
Yeah, and then before that, you were like in the mountains or something. You were in California. I don't know where you were. But
that's a couple months ago. But yeah,
feels like yesterday. Okay, but you're here now. We got you. We got Brent Kochuba. Let's talk options. Let's talk gamma, shall we? Where's my little bumper? There we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hello, Brent.
Boom.
Hey, how you guys doing?
Great. How are you?
I'm doing great. I love exciting markets, so you can't ask for anything more than what we got this morning.
We picked a good day.
What a day to have you on, man.
Yeah. I was petrified. You get these days where nothing's happening, then I just kind of stare at you, and you stare at me, and then we just kind of say good talking.
Yep.
Well, we'll give you a chance to talk about SpotGamma. One of the things that I love what you guys do, and I have to be honest, I don't fully understand it, so I'm hoping you can explain it to not only me but to our audience. Is you guys do a really great job for options traders of identifying key levels of support and resistance in the broader markets, and you call them call walls and put walls. Can you go into that a little bit and talk to us about how you find these levels and why they're significant?
Yeah, thanks for that opportunity. So everything that we do here is analyzing the options market to understand how that drives the underlying stocks that we're all trading. And options volume just continues to blow the doors off, right? There's zero DTE, and we had huge put buying, and now we have huge call buying. And actually, the exchanges are going to launch zero DTE in single stocks now. So the volumes continue to grow. And as that volume grows, that flow has to be hedged by market makers. And so we look at how market makers need to buy and sell underlying stocks in order to hedge that options position. And through that, we started to build these levels, right? Call walls and put walls and different flows like that. And the goal there is to say, hey, these are the big options levels, right? These are where all the calls are, or these are where all the puts are. And at those levels, these hedging flows should unlock. And that is what really creates support and resistance. And so one of the cool things here is that a lot of people who trade futures or just trade underlying stocks will start to watch these options levels because they want to know, or they need to know, how these options flows are moving the stocks. And so that allows them to get a real hold or grasp how those options flows are meaningful.
And what's important for traders to know is at those levels, where you see there's a lot of call open interest or a lot of put open interest, it's important to know, are the dealers net long or are the dealers net short? Because then gamma comes into play here. And can you talk to people about what it means? Like, what's the difference bit of, if we're coming up to a level in the SPY, which we're probably getting close to now, why is it important whether the dealers are long or net short?
Yeah, that all tells us about volatility. So one of the key things in markets is, whether you're an options trader or not, how much return are you looking for in a trade, right? Am I expecting a half a percent return on this trade or a 5% return on this trade? And why that matters in as it relates to gamma is because we can evaluate whether market makers are going to chase price, in which case they may move a stock more than you would expect, or whether they're there to kind of suppress volatility. So, for example, if you have a negative gamma environment, what that means is that if the market is moving up, market makers have to buy stock, right? And that squeezes the stock higher. Whereas if you have what's called a positive gamma environment, you're going to have market makers selling stock into that rally, which kind of snuffs the rally out, right? It adds resistance. And so when we look at the market over the last month, market makers have been in this negative gamma position. And essentially what that means simply is that they're there to chase price, and that makes markets swing way more than you would expect. And then not only that, we have this other interesting dynamic in this market where liquidity is really poor, underlying liquidity, and there's a bunch of different metrics for that. So you get market makers that are kind of like forced traders, right? They have to buy to hedge or they have to sell to hedge. And that's happening into this liquidity vacuum. And so I think that's a lot of the reason we've had just kind of unparalleled trading ranges over the last like 6 weeks.
Right. So I'm seeing VIX now finally printing below 20. Does that change the dynamic, you think? Do you think dealers are going to start flipping from net short to net long gamma?
Yeah, not yet. And I think that there's a couple of reasons for that. Number one is there was a lot of put positions that were on from last week, right? People were hedging this China news and we didn't know which way the market would go out of this weekend. And there's also some long call positions in this, right? Essentially, you didn't want to be short options into this weekend because you didn't know what was going to happen. And if you're short puts, you could get run over. And if you're short calls, you could get run over. So when traders buy calls and buy puts, market makers are selling them, right? And that means that they have what's called the negative gamma position. We just talked about this. And so when we're chasing prices, when we're all adding calls and long puts, that's that negative gamma dynamic for market makers, which means they're chasing prices. Where you start to get volatility to contract is when people start to sell calls, right? Or they start to sell puts. And right now, we don't see those positions happen until like 5,900 or more in the S&P 500. So what that means for us as traders is that price is going to continue to whip all over the place, and we should expect volatility to continue to increase rather than saying, hey, the trend is going to really contract a lot and VIX should go down a whole lot more. There's just no stability in this market is really what the options market is telling us.
Right. So seeing VIX now getting below 20 for the first time since, what are we calling it? The tariff tantrum, the liberation day, whatever you want to call it.
Yeah.
I guess I'm a little bit confused. Like, 20 is still a high level.
It is.
Historically. It's not, it's not extreme high, of course, and we've been higher, certainly recently. But what's your sense here, what you're seeing in the options market? Are we still set up for continued, multiple percent moves in either direction in the broader indices?
Yeah, absolutely. I mean, just look at today, right? S&P's up 2.5 roughly. NASDAQ is up 3.5. That's volatility. Even though that volatility isn't going down, that's still volatility, right? There's a huge trading range. So there's this cool thing. If you divide VIX by 16, right, you get the S&P daily move. So if VIX is at 16, that means the S&P is moving at 1% on average per day, right? So the VIX right now is forecasting moves slightly over that. But if you look at how much the market's been moving, the S&P's been moving, it's closer to 20 or 25% in terms of implied vol. So daily ranges are closer to 1.5%, which means that the VIX should be closer to 24%. Does that make sense?
It does.
It should be closer to 24. So the underlying movement is still humongous, and the VIX is coming down because traders think that volatility is going to cool off in the future. And it's hard for the VIX to drop much more than it is at 19 now, simply because of the fact that the market keeps whipping all over the place, and liquidity is just not that great. That we have CPI tomorrow, we have PPI the day after that, so that's going to keep some floor in the VIX, which means that we shouldn't see it drop a whole lot more than I would think, kind of like 17 maybe at this current time. And a lot of this was what this speaks to me is just a regime shift, right? We had a very quiet volatility period in the end of 2024, and really since Trump kind of took office and this tariff stuff and rates are moving around, we're unsure of the economy and all this other stuff, we've really moved to a new relatively stable high in the VIX. If you remember in 2022, the VIX was at 20 the entire year, right? And it really wasn't until, again, 2024 that it came under. So I think that we all kind of need to be prepared for like this new VIX regime or new volatility regime where, 1 to 2% daily moves is kind of just the normal thing. I don't know about you, but I've kind of gotten more normal to that, where once we stopped getting 400 handle moves in the S&P every day, I got bored pretty quickly. It was like, hey, what's going on? So so we're in this new volatility regime, and I don't think that we should expect that to really shift or come off anytime soon.
Yeah, look, as traders, we like volatility. Volatility spells opportunity. One thing I was thinking of as I'm watching the VIX come down is there's a whole cottage industry of traders, options traders, who like to sell premium. They like to be delta neutral or approximately delta neutral. And when I've been doing that. I do that's some of what I do. And I always find, and I'm curious if you have any advice on this or any points to make, but I find that when I'm short premium and I'm attempting to be delta neutral, I would think that seeing the VIX coming down like it is coming down on a daily, say that's good for my position. But oftentimes when you see VIX coming down and you think that's going to be to your benefit, it's because the markets are just grinding higher. And if you're managing a short vol portfolio, I find that the slow grinding up markets are the hardest ones to manage.
They are. And to your point, the VIX is I called it an indexified calculation of volatility. And so what it basically does is it looks at SPX options that are 30 days out, and it's a basket of SPX options. And so what naturally happens to the VIX as the S&P rallies is the VIX just goes down as a function of the S&P values, S&P options values. It's not actually telling you that volatility is necessarily dropping. So we look at something that's a little technical called fixed strike vol. But really what this is telling you is the VIX is simply dropping just because the market rallies. If SPX drops, the VIX is naturally just going to go back up. And that's not actually telling you anything about the relative level of volatility. So when you think about fixed strike vol, you sold a call, right? Let's say you sold the 590 spider call. You are short the volatility of that specific strike, right? And so that is really what you're saying when you're shorting vol. You want the vol of that strike to go down. And it's tough in this environment because the market's up 2.5%, right? Again, that's volatility. So your strike vol is not going to move a whole lot, even though the VIX is going down. So people kind of conflate the two things, where VIX is is a nice index to get a finger in the air idea of maybe what volatility is doing, but that's not actually helping you with those kind of underlying trader dynamics, right? And so what you really need here is S&P to stall out. You need those ranges to contract. You need the market to trend a little bit. You need more positive gamma to come in, meaning market makers won't push the market around as much. And then you really see that volatility start to contract. So I would think that would start to happen now, that the trading ranges will come in a little bit. We are seeing signs of bigger hedge funds starting to sell S&P options up around the 5,900 level. That should help the volatility of calls really start to come in. And so, when the market jumps 2.5%, your short call position is not going to look good, right? But now when the market starts to trend a little bit and turn sideways, you're going to see that volatility come in, and then I think short calls will really start to pay.
So Brent, I'm curious on your take on this. I hear a lot of people talking about how with the advent of zero DTE options, and you mentioned that they're coming for the big name stocks. It's inevitable, right? It's coming. The exchanges are a for-profit business, and they're making a lot of money off these zero DTE options. Anyway, I've been hearing a lot of things from people on the fringes that the zero DTE options have really have changed what VIX means. Do you have any opinions on that, or do you have any insight to offer on that? Because you mentioned earlier the VIX measures the 30-day options, but with so much of the volume happening in the nearer dated options, is the VIX not telling us the full picture anymore?
Yeah, it's really funny because there's a whole bunch of zero DT trading strategies that are sort of like when the sun is shining and everything feels good, the zero DT people come out and they come out in force. Or, if you look at, hey, the CPI is tomorrow, I'm not really expecting much out of it, I'll hedge that with the zero DT option. And so people started to say, hey, that's the death of the VIX. And what is, if you're long VIX options, what are you hedging? You're hedging longer term uncertainty. And so what's funny about this is if you look at the lowest percentage of zero DT flow in the last 2 months, it was on April 9th when the market was crashing and no one knew what was going on, right? So what kind of happens now is when everything looks clear, it's like the whack-a-mole, right? It pops its head out and people start trading zero DT options because, there's no real risk in the market for today. But when there's these big unknown, like known unknowns, right? Like Silicon Valley Bank was a great example. When that bank was crashing, everyone's like, I don't know, what's going on here. I can't hedge this with the zero DT option. One headline might take me out, right? Those zero DT players disappear. And so we've seen a resurgence in VIX with the uncertainty through April. But as soon as that uncertainty starts to go away, like today, there's no real headlines anticipated or whatever. So you would expect a lot of zero DT volume. So it's kind of like there's a lot of these HFT shops or high frequency traders or even retail traders that like flick zero DT on when they don't see any risk, right? The sky's blue for today. We can go out and play. And then tomorrow, if Trump starts tweeting and things get risky, then they all disappear. And that matters because 50 to 60% of options volume now in the SPX is zero DTE, right? So that's all liquidity that is here today and then could just be gone tomorrow and create much choppier markets. So I think on a normal basis, the VIX doesn't mean as much, but as soon as you get any type of crisis or anticipation of a crisis, then suddenly everyone turns back to the VIX and say, okay, we need to watch the VIX now, and the way that it's shifting, it matters a lot. And then as soon as the headlines kind of go away and we get more calm, then all of a sudden it's just the focus is back to zero DTE.
Right. Brent, another question I have for you, taking it in a little bit of a different direction here, but because we have zero DTE options and it allows for very short-term, very tactical bets, we now have a very wide range of expirations that we can choose from. As an options trader, do you feel that actually, let me back that up. As a retail options trader, do you think that there's a playground that retail options traders should stick to and they have a better chance of success? Should they be playing in these shorter dated options, or should they be thinking in 3 to 6 month timeframes for their options trades?
I love the shorter dated options and zero DT options, playing them, because there's you can express so many trade ideas with such great risk reward. And particularly in this market, particularly when you wait towards the second half of the day, right? There's so much intraday volatility now that you could buy call flies and call spreads, or put flies and put spreads, and all these interesting trades where the risk reward and the payout is just, fantastic if you get right. And there's all these crazy moves now. You see them all the time in the last 30 minutes of the day where things just, rip. And so I think what I tend to see from the retail options trading market is that everyone wants to be able to like sell the small trades so that 9 out of 10 times I'm right and I just collect my little premium and I'm good. And we're always trying to kind of flip that paradigm, saying be comfortable with being wrong 7, maybe 8 times, but those 2 times you're right, you just kill it, right? You make, $20 instead of selling a nickel every day. And so I love the short dated options for those reasons. And one of the things that we've been recommending over the last couple of weeks here is, if you're going to own put protection, buy puts that are 2 months out, right? Something like that, where now that vols come in, you can buy some puts, vols come down a lot. So that makes sense. And then you can hedge that with the zero DTE or short dated options, right? Because the payoff or the cost of the, 1, 2, 3 days out, those options are really cheap. And then you can own that longer dated put, right? So as you have your hedge, you don't have to think about it. And that insurance, I think, is really helpful. So there's a range of different reasons to select different expirations. But I think in this day and age, like, why trade futures a lot of times when you can trade these cheap zero DT options and just get a much better payout, right? A much better risk reward a lot of times.
So if I'm reading you correctly, it sounds like with the shorter dated options, you prefer to be long those options. You're not selling them. You're not collecting premium on them. Is that fair to say?
Generally speaking, every day is a little bit different. Depends on what the cost of those options are. Sometimes you'll see, like especially into a data print where the market is pricing in like a 2% intraday move on CPI or whatever. That's not for tomorrow, but just as an example, like you don't want to buy those, right? And that's what I was mentioning, specifically waiting until the afternoon, because when those options only have like 3 hours left to expiration, you can put spreads on that get very, very cheap, right? So you can make 20 S&P handles for, and you're paying 50 cents on net, risk for that, right? So that target, when you wait for that time decay to hit, starts to make a lot of sense. There's this famous guy called Captain Condor, for example, who loves to sell these iron condors.
I've heard of this guy.
Yeah, and his size will get huge, right? And that inevitably is just this incorrect trade, right? He'll lose 4 or 5 times in a row. And because he keeps doubling down, he kind of has been getting lucky and getting himself out of that strategy. But I think a lot of people get locked into this idea that I'm a person that sells option premium. So every day I'm just going to sell options premium. And, sometimes that makes sense. Other times it doesn't. I just see typically when you start talking to traders, that's the lens they come in with, right? Like, I'm here to sell options because most options expire worthless, which doesn't really tell you about risk reward, right? I think that the more interesting trades rely typically, again, in that second half of the day with the zero DT stuff, where those zero DT options get pretty cheap.
Yeah, I've talked to a few options traders. Let's call them novice traders, but a lot of them tell me that they look at, like, say, the SPY or the QQQ, and they see in the shorter dated options, the ones that expire today, tomorrow, the next day, they're looking at the implied volatility and saying, oh man, the IV in these options are so much higher than the options that expire 14 days out. I should be doing calendar spreads in these. I don't know. It seems to me like you're asking for trouble in that situation.
Yeah, implied vol for zero DTEs or 1 DTs gets really skewed because there's such a short time to expiration, right? So those have much higher implied vol. So those people, you really need to look at something called time weighted Vega, which is more of an intense concept. But if you just chat GDP that, you'll look that up. And essentially what that is you need to weight the counter spread. You need to weight how much volatility is in a 1 day to expiration option versus one that's a month out, right? So that, those are some of the dynamics that you need to be a little more careful of. But I also think the zero DTs are nice, entry in the options market, because the payouts make a lot of sense. Because look, there's only like from right now till 4 o'clock, I don't have to worry about how vol shifting in a 2-month option and the payout diagrams over such a long period of time. Like, you can structure like a call fly today and see how it pays out by the end of the day, and you can learn a lot from that, right? You can really start to get your feet wet. And I think generally looking at implied vol for the zero DT options is not going to help the average trader all that much.
Yeah. Well, Brent, you've built some great tools there at SpotGamma. I've been playing around with them. I find that there's a lot for me to learn still. But you guys provide tools that are very unique for options traders. We talked about the vol walls and things like that. And your platform is very good at visualizing, where opportunities are in individual names based on the IV, the implied volatility situation. And anything that you'd like. I know you guys released some new products recently. You want to give a little spiel on some of the new stuff you guys have?
Yeah, if I could show my screen here, I'd just like to show you, we talked about a lot of heady concepts here to start. And I want to break down just how you can watch the options market to help you understand how the stock market may move. So we were talking about negative gamma and positive gamma form. We call this trace. And what you see here, these red bars, right? This is showing you the real-time options market maker positioning for the SPX, okay? And so if these bars here are red, that's telling you that market makers are short calls. And so remember how we were talking about in that environment, market makers have to chase price, right? And so what this is telling us here, and I could zoom in a little bit on this, is that market makers are going to have to chase price all the way up here into the 5,900 area. And then to the downside, they have about to 5,800. And then what we see are these blue bars. You talked about call walls and put walls before, right? Well, this is our call wall. This is the area where market makers would go from buying stock to selling stock. So as I sit here right now, I see the market has come off of that high, right? People found to monetize some hedges at the open. There's nothing here to stop the market from rallying all the way up to 5,900. And then at 5,900, these big blue bars are telling us that market makers are going to start selling a lot of stock at that level. Does that make sense?
It does, yeah.
So you can sit here and say, I don't really understand gamma and delta. I'm like new to me and all that. But when you look at this map, what you're really seeing here very simply, and if I just change this map here a little bit, what you're seeing here very quickly is this red area means dealers have to chase price, and they're going to have to do that until we hit either 5,900, or if we get down to this level where you can see these little blue bars pick up just slightly more, right? So this map updates every 10 minutes, and essentially what it's telling us is, hey, how are the market makers positioned? And their positioning is a function of zero DTE positioning, what everyone, longer dated trades that are coming in, whatever else is kind of being thrown at us. And so it's a great way of understanding these if-then statements, right? If the market starts to rally right now, how high can it go? And I see no reason for it to stop until 5,900. At 5,900, I definitely, will be reducing a long position or selling calls or do something like that, right? Then the second thing is, how are the options trades right now impacting the market? And this chart is cool because it's telling us just that. So if I open this full screen, there's white line is just the SPX price. Very simple. The purple line is the market maker hedging flow from all trades taking place in real time. So anytime someone buys an SPX contract or a spider contract, we look at the hedging pressure from that and then say, okay, do market makers have to buy or sell? And so if this purple line is going up, this is telling us that since the open, market makers now possibly have to buy up to $1.5 billion worth of S&P futures or spiders, right? So I saw the market dip at the open, but now what I'm seeing is options traders are buying the dip, right? And they're buying it with pretty good force. Does that make sense?
Yeah.
So like you don't necessarily need to know about deltas or gammas or anything. If that purple line is going up, it means people are buying stock, right? Or getting long the options market. And so that to me is a great dip buying indicator. And you just say, well, how big is that flow? The range of this flow over the last 30 days is positive to negative 4 billion, and we're at 1.7 billion right now. So this is a pretty good dip buy off of the open. So as a stock trader, I'm looking at this going, oh, do I buy the dip? Do I not? I'm not terribly sure. Well, the options market's buying this dip, and so that helps me understand what's happening a little bit more. And then not only that, you can also just look at single stocks, right? So what are they doing in the single stock space? This S&P basket right here, because you can look at each individual stock, or you could say, what are people doing in combined in Tesla, Nvidia, Apple, et cetera? Well, you can see here we're at 700 million already of buying. So it looks like single stock traders are buying the dip right now as well. So when I'm unsure on the open and people are digesting the news and we're trying to figure out what's happening, I'm just looking at the options market and people are buying this dip, right? It's not a guess. It's literally what they're doing. They're buying calls and they're selling puts, and that's making that purple line go up, and that makes me feel pretty comfortable about buying this dip right now or being long into that level that we mentioned before, which is 5,900. Because, you know, again, right now there's the options market's telling me there's no reason to stop until we hit that level. This purple line is that same indicator we're just looking at. We call it hero. So the dip is being bought. Why should I get off that train until I see options induced resistance, right? Which to me comes in at 5,900.
And the important thing to note for people is that, yes, this data right here is talking about the S&P, right? But if we're seeing that the S&P has room to go, then if you're trading other stocks, you know, stocks that have high beta, that's good information for you. There's potentially more room to run in your individual stocks. If you're trading Tesla or Microsoft or Apple or whatever, this is still important information to you.
Yeah, that's totally right. And you could break it down on the individual stocks, but people always say, hey, Brent, why do you focus so much on the S&P 500? Because the S&P 500 options market is larger than the NDX, all single stocks, and the Russell combined, right? It's just a beast. It's so large. So to your point, though, the reason we created this S&P equity basket is because when people start going off buying NVIDIA, Apple, Tesla calls, that's enough to move the S&P as a whole, right? I mean, if Tesla goes up 10%, you could do the basic math on what that means to the S&P 500 or to the NASDAQ, right? So you want to look at those flows kind of holistically, and oftentimes they really just all sync up, right? If people are, generally speaking, if they're buying, you know, Tesla and NVIDIA calls, then people are probably also buying S&P calls, right? And that just gets the whole momentum machine going, going north. So that's one of the things that we find really interesting. And then, you know, last but not least, there's a lot of interesting ways in the options market where you can express, to your point about high beta, what is the best name for me to get long to get exposure, right? Because sometimes like Tesla may be very expensive or spider options may be expensive, but there could be a cheaper way for me to play options. And so one of the reasons I brought this screen up, because I just want to show this, we call this our compass tool. And are you familiar with IV rank, implied volatility rank?
Absolutely, yeah. Key part of what I do.
Sweet. So that's our y-axis, right? So high implied vol and low implied vol. And then the right side is our calls expensive, and the left side is our puts expensive. Does that make sense?
Yeah. Oh, yeah.
So when you look at this, if you're familiar with HIMS at all, HIMS has been ripping, right? So that has high call. The calls are really expensive. Implied vol is pretty rich right now. And that makes sense. Stocks up like, I don't know, 200% in the last 2 weeks, right? So those options are really expensive. And if you're going to say, hey, Brent, like what would be a great way to get upside exposure for cheap? Well, look at Microsoft, right? They reported earnings last week. The implied vol is very low. Puts have a higher cost right now relative to calls, but that overall low implied vol tells me that calls are probably pretty cheap right now. And if the S&P goes up 5%, the NASDAQ goes up 5%, I'm willing to bet that Microsoft's probably going to go up. It's the biggest stock in the index, right? And I think in NASDAQ as well. So, you know, that may be the way that I would want to get the cheapest upside exposure right now in the S&P or in the NASDAQ, just as my macro kind of like beta exposure to the indices, right? Whereas like if you look at Tesla or spiders, those options are a little bit relatively more expensive. And then, you know, what if you wanted to sell options? Well, Target puts right now, I think they report earnings here. You can see 521. So that's elevated the implied vol a little bit, but you can start to see which names have higher put prices or higher call prices, so you can find, hey, let's sell these options, right, and buy these other ones.
Nice.
And so that can be really helpful to navigate. And then the last thing I just want to bring up real quick on the same topic is from a sector perspective, this has been really interesting. And I've been focused a lot on Bitcoin recently, not because I understand Bitcoin and all the, flows happening there in the global, currency market and crypto market, et cetera, but what is the price to get exposure to Bitcoin? It has been remarkably the lowest volatility asset of the major assets that I watch over the last month. Yes, Bitcoin did go down a little bit, but the vol never spiked, which is pretty incredible given everything that's happened in the last month. And it's rallied a lot over the last couple of weeks. And yes, calls are a little bit more expensive than puts because we're on the right side of this, but we've not had that blow off Bitcoin top. The chase into Bitcoin calls, a la what we just on HIMS, you would expect that to finish when Bitcoin, this is the Bitcoin ETF. Sorry for those of you who don't know. You would expect to see that implied vol slide up, right? Which is the classic stock up, vol up, people pile in and chase this name, right? Chase Bitcoin. And so anytime I'm watching to see if an asset is relatively rich or expensive, I'm watching the IV rank, because usually those moves, like in gold recently, this happened. Usually these moves finish when options just to get to be ridiculously expensive. And there's a lot of reasons I think that actually stops the upside movement in a stock or an ETF. But in this case, it's also just my proximity for, are we overbought yet? Well, if you tell me the IV rank is up here, we're at 100% IV rank, then I'm probably going to tell you that the move is tapped out, right? And nothing is ever 100% guaranteed. But that's my kind of barometer. And to this point, we saw gold had a record IV rank about 2 weeks ago, and that coincided right with the highs there, right? Because calls just got very expensive, which from a 1 year perspective just told us, look, people shouldn't want to buy calls in the stock or the asset anymore because they're super expensive. And then what do you see? Well, the move kind of stops, it comes in, right? So you can use these options prices to really help you navigate asset prices or stock prices, even if you don't trade the options, right? Because you could just know, hey, options market's telling me that this is really expensive, probably overbought, or this is really cheap, maybe there's room to run in this thing.
Well, Brett, this is amazing stuff, and I wish we had more time because there's definitely a lot more to get into, and I certainly have a lot more questions. But thank you for coming on and giving us your insights, and we really appreciate all you're doing for the options community.
Thank you very much. I really appreciate the opportunity to come on and speak with y'all today, and good luck trading for the rest of the day.
Thanks, Brent. All right, wanted to get that in before we all left for New Orleans because Sean's been talking to these guys, and he's like, we got to bring him on. I think they're doing really cool stuff, so we might bring Brent back and do some more stuff with him down the line. But I hope you guys enjoyed that. Sean, it was great to see you for 5 minutes. Have fun in New Orleans without me this week.
You're going to have a baby while we're gone, right?
Oh, don't put that on me.
Come on.
Might.
I might. I don't know.
Spencer, can you throw up slide 2 here, and then we'll finish up with this. I want to hear Sean's take real quick. I actually gotta hop. Just throw it up.
Okay, give me a minute. I wasn't prepared for this, but okay.
Quickly.
Come on, hurry.
That's not mine, baby. That's not mine.
Wait, what's slide 2?
That's not my baby.
Yes, please. Sean, I'm looking to short this guy. I'm looking to short this.
Again? We're again on this name. Here we go.
Again? We've been waiting for the break. There's no again. It's been on the watch list, on the short watch list all year.
I'm going back to last year when this thing was running up 300 points in a month, and you kept wanting to short.
No, I know, because this stock is why we don't sell naked calls, because as much as I wanted to, I never did, and we're all grateful for that. But that's not the point. The whole thing was, Strazza's in the chat. Yeah, we know you hate it, Strazza. Thanks. Thanks, Strazza. We know. I don't necessarily hate it or love it, but this top and the things not up and the market's ripping, break below 700, maybe some put spreads. Let's give it some thought, Shawnee.
Yeah, look, I'll tell you what. I mean, just at first glance, without going deep into the chain here, with the market up the way it is today, everything else is up. No one's looking for short trades. The implied volatility in Lilly is very low, surprisingly low, considering the way it's been trading the last 2 weeks. You could just buy simple puts. They're going to be expensive because it's an expensive name.
That's why it's spread.
But you could do a spread. I mean, some bear put spreads here, maybe buying the 700s, selling the 600s, going out a few months.
Look, I've been hanging out with you too long. That's exactly what I was thinking.
Yeah, I don't have the, like I said, I don't have the chains up in front of me, but just that's where I would start looking right there, buying the 700s, selling the 600s, going out to I don't know, go out to September, give yourself some time for this thing to complete a top.
I'm with you, Shawnee. All right, I gotta hop. I gotta get back to work. We got ducks to feed. The ducks have been starving here around me because I haven't been feeding them. I've been feeding them during your conversation. That was a great conversation, by the way. All right, I'm out. Adios.
All right, see you, Sean, JC, everyone. Have a great rest of your day. Chart request live. Email us your requests, questions at stockmarketmedia.com. We'll see you there, and go make some money.
Baby time, baby time, baby time, baby time. Woo!
Okay.
Run it. I can't take no loss. I don't even know what it costs.